Today I want to teach you about the art of reversal trading, how to pick the right reversals. We'll go to some trade examples from the past week, things I took myself, and I'll give you my whole process, the entire thing from start to finish, how I pick reversals, what things you gotta look for reversals, and you can use my process to start to get some consistency in the market. So let's dive right in. Alright, my voice is a little bit not so good yet. I had a flu the past week. I've been not doing anything for the past week, so I apologize for the past videos not coming out during the week. But let's dive right in. I want to show you how that works. We'll go through the theory first, and then the practical examples of some trades in the market. A very good methodology here I've been using for at least 8 years now. So let's go right in. Alright, so for any kind of trading, you need to have a process. That's the basic, the first step into everything is a process. Now, I trade myself reversals, most of them. You'll see in the market while I shoot some trades, I also take the first pullback on a move. Whenever we break of a level, I'll take the first pullback that happens just after that. But what do we need to do that? Well, we need a few things. First thing we need to do is we need to find a way to identify the market phase. So what's the market doing right now? Okay, that's the first step. If you don't do this, you'll trade just based on setups at any random points, and it really works pretty well. So for me, I need some support and resistance areas. Now, I typically don't trade the zones that are, let's say, trending like this. I don't trade these. I don't trade those that are like triangles. I mainly focus on these ones that are horizontal lines because I feel like I'm better at looking at them. I spot them better. Now, there's a few exceptions. On a pullback, I might look at these ones too for a pullback. But in terms of most trading reversals, it's mostly straight horizontal line. So just keep that in mind. But you can do anything you want. Now, once we get there, we need to be able to wait for these zones to place trade. We're not going to trade between the zones in the middle. We're not going to trade when price is randomly moving. We'll trade only when price is in those zones and giving us a nice setup. That's the first key. Okay, so you only want to trade when price is going to be at the low in the support or the top in the resistance. Okay, that's the only place you should trade. If you trade like me, of course. If you want to have that methodology that works pretty well, you got to do these things, okay? Next step is we need to look at some kind of price action. Okay, so I'm a big fan of price action. I know it works really well in the market if you spot it right and if you use these tools correctly. Most people will just look at a pattern and enter a trade right away. That's not how it works. You need to have this in place with other things on the side. So price action, I'm a big fan of engulfing candles because they signify a change in the trend. Okay, think about it. If you have a big bullish candlestick, then a big bearish candlestick next to it, what does that tell you? It tells you that the sellers are coming into control of the market and that price is likely to go down after. Okay, in most cases, of course, not all the time, but in most cases, that's the case here. All right, so this is my number one setup. Now, there's more to it, but we'll just keep with that for now. Next, I like to have some indicator because indicator gives you a clear view of what the market's doing. Now, you're not going to have 5 indicators. You're going to have only one. I only trade with only one indicator on my chart, not more than one ever. And the one I use for my reversals is the Bollinger Band. Bollinger Band makes sense to me because they are based on logics and numbers. Okay, they're not based on like some calculation that are like fancy and like based on random stuff. It's really based on a logic in the market. If you look at the Bollinger Band, this is a very crash course in 30 seconds on Bollinger Band. If you look at statistics, you know that in a random distribution, which is a curve where most data stands, you're going to have most that's going to be in the middle, some at extremes, and then some little part at the other extreme, like more far from there. And what this gives us with statistics is that in one standard deviation away from the mean, so here we have a moving average. This is the mean. Okay, this is our mean. It's the middle band of the Bollinger Band. It's a 20 moving average. So in a 20 period, within one standard deviation above or below the mean, so above, which is the upper band of the Bollinger Band, this one over here, below, which is the lower band of the Bollinger Band, this one over here. So 95% of the data should be between 2 standard deviation beyond or below. Okay, so within these range. So here we're going to have 5% above, 5% below, and that should be where our data lies, okay, or where price goes in the market. Now, you know if price is beyond the 2 standard deviations of the Bollinger Band, it's likely to come back down. It's likely to come back within the band, okay, if it went beyond, because only 5% of the time it should be beyond the band of 2 standard deviation. If you increase this to 3 standard deviation beyond, then it would only be like maybe 2.5% being beyond the band. Okay, so of course we have less there. I like the 2 standard deviation, so it will be a sitting 20 period, then 2 standard deviation of the Bollinger Band. That's the one I use, works quite well for me. So we know if price is going to be beyond the band, it should come back within the band eventually because a small number, a small percentage of the time, price will go beyond the band, but then it will come back within the band. Okay, so that's how it works. Now, there's a few rules when it comes to how I enter trades here, how I go in the market, and what I do after that. But I'll go in the chart to show you that because that's going to be a lot easier to do. So let's dive to some trades. And if you can understand this principle here, this methodology, you have like most of the job done. That's the main point here, is to understand the strategy. Next part is going to be traded correctly in the market. And that's what we'll get to just right over here. Alright, so this has been a good week for trading this past week. We had a few trades. I'll give you some losing ones, some winning ones also. But let's keep in mind here. So what I like to do is I like to have a bigger time frame first. It could be a weekly chart, a daily chart. And I like to see what's the big pattern in the market. So we talked about the market phase before. That's what we look at here. What's the market doing? What phase are we in right now? And here you see we are kind of like in a trending phase, but somewhat consolidating in the market. We can draw these two lines, top one and lower one. Okay, this is only based on recent data. I'm not looking back like 1,000 years of support resistance areas. It's just what the market's doing right now that I care about. We see prices going within those limits, respecting them quite well, until we get a break here. We have a clear break of this zone. Okay, in the past we only had wicks going outside. Here we have a clear break. And this means, like, I don't trade these lines for me because these lines are messy a little bit. I like the ones that are straight lines, very horizontal, but not like this. That's trending. But what I'll do is I'll trade the first pullback because we have a clear indication we are in a downtrend, down break here again. We can then trade the first pullback to the downside. So what I'll do is I'll look a lower time frame to look at my trade. Daily chart will be the same for looking at the zones here. But for 1 hour is when I look for more trades here. Okay, so before I go further, I'll just put here the Bollinger Band on my chart. And you see how that works out really well here. So we have price breaking the support area here. That was a downward support area. And then we have price going down a little bit. Pulling back, coming back a little bit sideways here. We're still trading reversals. See how we kind of have a new sideways range here. We have this one over here. This will be a resistance now. This will be our somewhat support. Okay, it's a bit more messy than this, but this is our clear resistance. But the first thing I want to look at is the first pullback. Where's price going to pull back? Give us a nice setup that I like with the Bollinger Band. And come back within to give us a nice trend here. So you see here price doesn't touch. I want to have price, of course, break the top band of the Bollinger Band to show us that price is going to be at that extreme point. So we can have a good reversal trade. This happens right here. We have price going beyond the Bollinger Band with a bullish candlestick. And then a bearish candlestick appears just after. A strong candlestick showing us that the sellers are not in control of the market. And what I like to do is simple. Once we get this, I like to enter the trade just below the low, right over here, a few pips below. Put my stop loss beyond the high, right over here, the most recent high based on these two candlesticks. Then I'll look for a take profit of 3 to 1, will be my big target. 3 to 1 will be over here. And a 1 to 1 is my middle target. So when price reaches 1 to 1, you guys know if you've been on YouTube watching me for a while, you know this stuff. It's very basic. It's always the same thing I'm doing. Once price reaches 1 to 1, I'll close half the trade. I'll keep the other half for the 3 to 1. And this will give us basically a 2 to 1 reward to risk total. So half at 1 to 1, the other half at 3 to 1. And this went quite well. Because you can see here, if I just pull this out, this is 3 to 1. And 1 to 1 was somewhere over here. Okay, a little bit before that. But that's cool. Alright, so this is a pretty typical trade. A mix of pullback and reversal at the same time. Works really well with the Bollinger Band here. And you wouldn't do this late in the trend. You want to do it in the beginning of a trend, like very early on. And that's what we have here. So breakout happening here. Trend started. Price pulling back. Kind of like a pullback here, but no setup. Starting a range-bound market with the support here, the resistance over here. Only have the second touch. Coming back again. No sign. Didn't break the support yet. So we're still at the first pullback phase. And then we have this nice reversal here, which gives us a good pullback in the market. That works quite well. Okay, that's a pretty cool way to look at the market. And it works super well. Alright, I'll give you another example. Maybe you have a losing one here in this market. That's another one. So again, we'll keep the same methodology. We'll go back on higher time frames and look at this same principle here. So what do we have going on here? Let's say we go on the daily chart. It's going to be a little bit better. What do we have here? We have price going in the range. We have a top here, first resistance area. So I'm going to highlight this by drawing something over here. And then price goes and touch this low over here, which was a previous resistance. So same level, touch here again. So we confirm a level. And then we have price. This is not a very clear resistance because we could have a touch here, again over here. So our high here is not very clear. Okay, but we should not mistake this here as a breakout because this level is not a very strong level. We didn't really confirm this level many times. Okay, so I will not trade this higher point here. Okay. I actually covered this in my video on false breakout, which I'll leave link just here in the corner, just above. I have a whole video where I teach how to avoid false breakout. This is going to be part of it. You can watch this after if you want. But now let's focus on the reversal. Price does a false breakout, come back within the range, goes back and touches the low, and then touches a little bit more deep in the low, okay, but then reverses right after. How do we trade this? It's very simple, same as we talked about before. So remember, we need to have the market phase, then price action, then our setup with the indicator. So let's look at price on a 1 hour chart when it gets here to that level. Okay, this is going to be a bit more choppy because we're on a lower time frame, but it still works out really well. Price is here, coming back. The zone is over here, by the way. Okay, so 91.6. Okay, here we touch. We kind of have a small break, but that's not really considered to be a break. By the way, if you have a good reversal, it's normal for price to hit just a little bit below your zone, come back within, give a nice reversal. That happens a lot of the time. Okay, so keep in mind, a break is not a break until it's confirmed with price action. In a reversal, it's never going to be a good reversal unless it's confirmed with price action again. So here we have price going back there. We'll add the Bollinger Band because that's the main indicator I use to trade here. Bollinger Band is on. Cool. And let's see how price breaks the Bollinger Band. Well, we had an example here, but we didn't have really the buyer stepping in to control the market. No engulfing candle here. We kind of had this here. We have the buyer stepping in, but then it's not the thing I look for because then I want to have both candlestick, meaning the engulfing candle and the candle before breaking the Bollinger Band. Here, I mean, it's tricky, a little bit touchy, but we only have one candlestick breaking the Bollinger Band. This one here doesn't break the Bollinger Band. So you'll see it's not having any wick, not outside the band. If you get this part. Here we have a bit of price action, price coming back down again. Bearish candle, followed by a bullish engulfing candle. This candle here closes beyond the high of the previous one, breaks the Bollinger Band, so perfect candlestick here. Same principle, I want to turn my trade here above the high, few pips above, stop loss below the low, few pips below of course. Again, you got to it, my big take profit is going to be 3 to 1, and my smaller one will be 1 to 1. Okay, 1 to 1 is just to kind of lock in the trade, lock in some profits. 3 to 1 is for building your account. So this one builds your account, and this one here is just to feel safe. Okay, it's just a target that you can feel comfortable. You can be more disciplined, kind of helps your mindset a little bit more. That's what we have the first take profit here. So again, I traded one pretty well. Price then after that pulled back, but then if you couldn't trigger here, then you could trigger here after for sure. Okay, so that works quite well in this market. Here I will not move my stop loss to break even because this is a reversal trade. Moving to break even works well when you trade trends, but not reversals. So I will not move anything to break even. I'll just take my trade, close half of it here, then the other half right here directly. And if you go back into my stop loss, that's fine by me. It happens sometimes, of course. So pretty good trade. Now let's go into losing one. Tired of these winnings. We're going to show you some losses because that's what trading is also about quite a bit. All right. So again here, same principle. We have a nice range, but this is all traded recently, all this week. Okay. So you have a nice range here that we can go on a daily chart to look at even better. Okay, pretty cool range. Resistance here, one touch here, one touch there, again over here. Support is here, pretty solid, one touch here again. Then we get to our resistance here. Looks like a cool level to look for a sell trade in this market. And you see price breaks just a little bit, but that's not considered to be a lot because we have a wick just above here. So let's see how that turns out on a lower time frame here. Price breaks your level, but again, like I said, it's normal for price to break the level, then come back when it's a nice reversal. The price action we have here gives us a cool indication we have a bearish move. Okay, if you put in the Bollinger Band here, you have price breaking the zone a little bit, but then after a few candlesticks very shortly, engulfing candle here, breaking the Bollinger Band again, right, engulfs the strong candlestick here before. So here we have some clear indecision. Here we have a clear move to the downside. I want to enter the market just a little below the low of this candlestick. So right over here, okay, stop loss just above the high. We want to risk, of course, would be take profit at 3 to 1 over here, and one take profit at 1 to 1. This one here didn't work out too well. As you can see, price here just shoot back straight away to the stop loss. So not the ideal trade, of course, but it happens quite often that you see this. So these type of trades should work in two ways. Either price goes straight to your first take profit, happens a lot, or price goes straight to your stop loss. This is usually what happens after a engulfing candle. You don't want to have some indecision going back and forth, being here for a while, doing this. Those trades are always losers. So you can cut them early. Okay, somewhere around here maybe. But these trades here should be going to your take profit quickly, the first one, or your stop loss quickly. Here we have an example, quickly. 1, 2, 3, 4, 5 candlestick. Boom, stop loss. Okay, it happens, of course. Or it could be the same thing on the opposite side. 1, 2, 3, 4, 5 candlestick. Take profit right away. Okay, so that happens a lot. So I gotta show you these examples here because of course you have losses if you trade this strategy. Like all strategies out there, you will have losses. You have to deal with them. There's no way to avoid them all. But you need to be comfortable with losing in the market. Next example here on, again, this past week. Okay, these trades happen all at the same time, roughly. Again, same principle, we have a nice range here, followed by a false breakout. Price pulling back within the range, hitting the support here. That was a pretty big move with the news. Then a real breakout happening. I'm looking at the first pullback here of this market. Okay, because we're not going to trade reversals here, we'll trade pullbacks because of price breaking the resistance here. Okay, let's see on low time frame what that looks like. And we have a pretty cool setup on the 1 hour chart. Okay, so in this market we have mini setups. We have a nice one here for reversals, which these ones were like way beyond. These ones were in September, September again, September. Okay, so we have a few setups here that we might take or might not take depending on the context around it and how the trade unfold. But let's go to this one here. We have, as we said before, same thing. So you can see when price does the breakout, we break out of the range, but then we form a sort of sideways market with the high being over here, or resistance area, then the low being somewhat over here. Although here we go a little bit below that, which is fair. Okay, that's fine. We're still in the range. And then we have price giving us a nice candlestick breaking the Bollinger Band. These setups are looking good, by the way. Really, really good. So we have price here breaking the Bollinger Band, lower. A nice here doji, or some kind of candlestick with a pin bar. And then a bullish candlestick right after. Okay, so this is a clear sign of a reversal. Plus, we've been outside the Bollinger Band for a while here. So giving us a good sign we'll come back within the Bollinger Band. Because look at, this is 1, 2, 3, 4, 5 candlestick being outside the Bollinger Band. And as well as this one. So 6 candlestick outside the Bollinger Band, which is good. We'll put our entry just above the high. Stop loss below the low. Give it a few pips. Then we want to risk of 1 to 1. Right over here, I think. And 3 to 1. Over here. Gives us a cool trade here. Again, we're not going to move a stop loss to break even because this is more a reversal trade, not a pullback necessarily. So we'll keep it like this. Then half price, which will take profit a few days after here. Pretty good trade. Okay, 3 to 1. And I kind of wrapped it up for the trades I want to show for this week. Now, as you can see here, the key point is if you want to use the strategy, you can use it. Make sure you practice it first, understand it better. There's a few small subtleties to it we didn't go through in this video that you can learn. So I'll put the whole video here above where you can learn even more of this stuff, learn more of the subtleties of the strategy. More in depth, you can just watch this and go through it by yourself. I know this stuff works because I've been using it for years. It works quite well for me. It could work differently for you, of course, so make sure you test it out first and understand it the best you can. If you want some help implementing this or creating your own strategy, check out the link below. I'm putting together a 12-week program for a small group of traders I'll help in the next few weeks to be able to achieve their goals, create their own strategy, get profitable in the next 12 weeks. So you can check it out below, but don't wait because I'm going to be starting this and then closing it in a few weeks when we get and start the lessons. I hope you like this video as always, and I'll catch you back here in the next video pretty soon. Ciao.